Hi, my name is Michael Barzak. I'm the Director of Retirement Plan Investments for Carson Group, and this is your market commentary and outlook for Q1 2024. In the market commentary slides for this quarter, we discuss a few topics highlighting the current strength in the economy and that point to optimism for the markets in the coming year. First, you will see that current trends in corporate earnings and margins suggest that this bull market is alive and well. Second, based on Carson Group's proprietary leading economic index, there is no obvious sign of a recession on the horizon, and that the view today is much better compared to where we were at this time last year. Third, inflation has continued to come down from its mid-2022 highs to a figure much closer to the Fed's long-run target. This bodes well for the potential for rate cuts in 2024, which is evidenced in the futures market expectations as well as the Fed's own year-end dot plot. Finally, we reviewed 2023 performance in the major asset classes and indexes where the US and growth factors like technology were strong. International equities generated positive performance but lagged US markets, and bonds started to right the ship as central bank tightening slowed or stopped altogether. I will now turn things over to Ryan Dietrich, Chief Market Strategist, and Sonu Varghese, VP Global Macro Strategist, for their views on the outlook for 2024. Thank you.
Hi, everyone. Welcome to the latest Carson's Take 5 with Ryan and Sonu. Sonu, this is a really, really special one. We're going to title this one, Welcome to Our 2024 Outlook. We officially made it. 2023 is in the wind, and we're moving forward to 2024. We're going to talk about how we see the world here, but I want to start things with a quote, Sonu, if I can. Thomas Fuller, in 1650, an English thinker and philosopher, said he's the person quoted for this quote. You've heard it before. It's always darkest before the dawn. And you think about a year ago, Sonu, how dark it was. So many people were talking about a recession and the bear market wasn't over. Fortunately, on the Carson Investor Research team, we took a different path there. But what is kind of, again, we only have 5 minutes. What is the biggest surprise you saw last year that so many people didn't see? And then we're going to talk about how we see 2024 playing out here.
I mean, to your point, last year we didn't expect a recession, and we got no recession, even though 85% of economists polled projected a recession in 2023. Instead, now this is where the surprising thing to me was I was expecting, okay, GDP growth will be somewhere around trend, maybe about 2%. Instead, we're going to see GDP growth 2.5% to 3% in 2023. That's well above the last decade's trend, 2010 to 2019. Best news, inflation fell while the unemployment rate has stayed below 4% for 23 straight months. A lot of people thought that could happen considering how fast and aggressive the Fed moved with interest rates, right? But it was a story of the supply side coming back while demand remained strong. I mean, American households remain strong. That's essentially why we think, we're not going to see a recession in 2024 either.
No, exactly. 2024, we saw some of the headwinds last year. Housing didn't do all that great. Manufacturing saw some start, some fits, some good, some bad. We think housing and manufacturing both can be positive for the economy and the consumer. The consumer, which makes up 70% of our economy and GDP, continues to be strong, led by an employment backdrop with an economy that continues to grow. Wages continue to grow. Inflation's coming back. All these things are kind of swirling again to say to us, there's always a chance of a recession, but we just continue to think the odds of recession are quite slim. And what does that mean, Sonu, for investors? If we can avoid a recession, that is potentially positive. We see the S&P 500 in 2024 gaining between 11 and 13%, which would put it at all-time highs and would be a pretty darn solid year. Sonu, what are one or two things you think can drive stocks, again, to all-time highs this year and do pretty good?
Well, the big thing is inflation's coming down, right? It has been coming down already. The Fed stopped raising rates in July. Their last rate hike was in July. And since then, they actually haven't raised interest rates, right? And I think we're done with the rate hiking cycle. But what's the catalyst really for it's already sort of happened. I think markets are expecting it, but we're going to see that happen in 2024. Interest rate cuts. The Fed's going to probably cut because inflation's come down. There's no reason to keep rates at 5.5% if inflation's running at 2%. Inflation's already there at 2%. I mean, yes, gas prices have come down, but even core inflation, right? That's come down. We've talked about rents and things like that. So that's going to be really positive. And then you get to, okay, if you have lower interest rates, that's a big boost for housing right there.
Mhm.
Business investment could go up as well. And that's potentially a big boost for productivity. Because what do you need for productivity? You need businesses to invest. And I think, the more of that we have, the more productivity growth we can have. And the nice thing with productivity growth, you can have strong wage growth. People can earn more while inflation remains relatively low, which means the Fed can keep rates also relatively lower.
No, that sounds like a really nice scenario. An economy that can avoid a recession, a Fed that was a headwind, now probably a tailwind, and higher productivity. Again, we think stocks will make all-time highs. We do like the cyclical areas like industrials and financials. If you can avoid a recession, like we think we will, we think those areas will do pretty well. We also like small and mid caps a lot. Those areas are relatively cheap. They've underperformed, yes, but is this next stage of this bull market? We think we're in a bull market. It's broadening out. Last year, technology did well. Communication services did well, but did very well. Communication services did very well. We think broadening out. There's other groups going to do well. We think, again, cyclical, small caps, mid caps likely take the baton. So we've got about 1 minute to go here. So we like stocks. We're overweight equities. We have been for a while. Let's talk about fixed income bonds, because we know a lot of investors who listen to what our team is up to and listen to this very video. They care about fixed income and bonds. How do you see bonds playing out this year?
I mean, just to back up, like last year, this time when we were talking about bonds, you're like, why take more risk with bonds, right?
Mm-hmm.
Cash is paying for. We expected the Fed to raise rates because we didn't expect a recession. Everyone else thought the Fed would cut. That didn't happen, right? Now this year, we are in the camp that the Fed is probably going to cut, maybe not as early as March, but at least by May or June, which means if cash rates are coming down, you're probably better off taking slightly longer term, buying longer term bonds, right? And we think bond returns would be anywhere between 5 and 6% for 2024.
Yeah, I mean, bonds had a rough go of things, 5 or 6% for bonds. We think stocks can be low double-digit returns, being led probably by small, mid-cap cyclicals. We should do a little bit better. The Fed is out of the way, and by the way, there's likely no recession. So that is how the Carson Investment Research Team sees 2024 potentially playing out. Believe me, these things can change. We're going to watch it every single day. But we had a pretty good go of things last year, and we think some good times are still coming in 2024. So with all that, this is the very latest Take 5. We'll be back next week. Take care. Thank you.